Hello, I'm Aussie Dollar Man, and in this video, I'm going to talk to you about a common trap that traders fall into and how you can avoid it. If you're new to the channel, welcome. It's great to have you here. Here are some videos that can get you caught up quickly. And if you do find value in this or any of my videos, I'd really appreciate if you can click on the like button, leave a comment, and subscribe to the channel. It helps me push these videos out to more people. A quick disclaimer, nothing in this video should be taken as a recommendation or financial advice. Do your own research and trade responsibly. So the trap that we're talking about is getting suckered into a trade when it appears the bottom is going to fall out of the market and you're on a big move. Here's the Australian dollar US dollar currency pair. We had a top here on the 16th of June, which looks like it will be the monthly top for now. From there, we had 1, 2, 3, 4 days down into Friday. Oh, that's an equal bar, basically a down bar there. When Monday opens up, we have a gap down, which is fairly rare on the currency markets. The market ran up a little bit to close the gap, and then it shot down. While it's shooting down, we've got the news telling us about how the US carried out a precision strike on Iran's nuclear facilities. We've got talk of retaliation. We've got talk of other countries joining in. We've got talk about World War III unfolding. And as a trader, you're seeing the market go down, 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 down. And there it is. There's the trap. It's that I've missed it, but the move is definitely in. Because you can see we've broken swing lows here, swing low down here, swings over here and over here. The market's broken all these lows. Big, strong run down. It's going down. World War III is going to happen. And you talk yourself into taking a trade. And what actually happens in most of these cases, sometimes the market will drop like a stone. But even in those cases, where do you put your stop loss? You know, after a spike down like this, it's going to bounce somewhere. So you either jump in and you get stopped out for a break even or a loss, or you let it ride with a massive stop loss. So in that case, you're either risking far too much on the trade, or your reward to risk ratio simply isn't there because your stop loss is 100, 150 points away, and then the market's got to move 1,500 points just for you to capture a 10-to-1 reward to risk ratio. I even found myself looking at this yesterday thinking, oh gee, this could really kick on if things escalate. But what happened? The move petered out and then it rallied strongly, and when I woke up this morning on Tuesday, the market had closed right near its high there. Let's go forward to today's bar. This was a screenshot taken at 3:20 Sydney time, and you can see that we're heading up here. Now, I believe that we are heading up into a lower top and that we will go down, and that is where I will be looking to trade if the market gives me a trading signal there. Now, ideally, I would have been short at the top here. I missed it by about 4 or 5 ticks. The market just didn't quite get there. That's fine. I can live with that. The market ran down. But if I start chasing the market, I'm breaking trading rules. I'm bringing excess pressure into my trading, into my life, and I don't want that. And so many traders would have jumped in on Monday somewhere when they see this gap here, or it didn't really go up after closing the gap there. It starts running down. So many traders would just run in and they all get burnt and kicked out as the market rallies into that lower top. So beware of this lower top. WD Gann called it the safest place to sell short, that lower top, because it's confirmation of the top. In my experience, often the better trades come at these lower top levels and they're easier to take. But whatever you do, whether a trade eventuates or not, make sure that you're following your trading rules and make sure that you have a low risk entry on the trade. A couple of nights ago during the Forex Form Guide, I spoke about these 3 dates that I'm watching. June 26 high, so around this point, well, that's what we're heading towards now, June 26 high. Whether it's a lower top here or whether we push up into a higher top, I think that we're due for a top and we're going to see a pullback. And given the number of lows that we broke in this daily swing down, and given that it is an overbalance in price, if you're not sure what that is, check out my video called How to Spot a Market Turn. But it looks to me like that top is in, and we're now setting up for a potential first lower top. Where might that come in? Well, one of the methods that I use, I have a few that I'll use and I'll look to combine them. One of the methods is a simple ranges resistance card, which Gann teaches in his book, How to Make Profits in Commodities. We've retraced very, very quickly, 1, 2, 3, 4 bars there, nearly 75% of the move. Now that 75% is a target level that I watch. If we break through there, it usually means that we're going to break this top here. Now, as I said earlier, 65.51, it was a fraction short of my targets from earlier. Maybe we run up and double top there, or maybe we go up into a new high there. Maybe I'm wrong, but that's what I start targeting. At the moment, this is all one section up, and I'm concerned about jumping in and going short here just in isolation. So I definitely wouldn't be trading this pattern. Should we duck up in the next hour or even the next few hours and touch that level, I think that's a very risky trade. What I would want to do is bring other pieces into the puzzle. So one piece is a simple trend line or an angle candle running from the top there. So there you go. If we run up around this level, you can see not only is that 75% milestone potentially going to block the trade, it may burst through there, but potentially it can block the trade. It's also going to have to overcome that trend line too. Now that's two pieces of evidence for why we may see a lower top forming in this area. But you would want to see at least another one or two pieces of evidence to tie this together. So I'll be watching this very, very closely. I have some time pressure around this area. It may be a fraction early now, but we have time pressure there. We have a resistance card there to watch. Note that I didn't say that it will stop there or it must stop there. I said I'm going to watch the market around there. But before we get there, I would like to see the market pull back and give us a completed first section up here on that smaller picture 4-hourly chart. Remember, there's your daily upswing there. And this is breaking that down into a 4-hourly chart move. That's all one move. Normally, when you break it down, you get at least 2, if not 3 moves. So I'd want to see it run down and then run up and actually stop on that level, giving us a contracting swing chart range up. Now, just before we move on, take a look at this chart here. Take a look at these milestones. What do you notice on the way up? You might like to pause the video. What do you notice here? See how the top of this bar was bang on that 37.5% milestone. From the low here, that point actually represents the halfway point between the low and the 75% retracement level. I think it was in Gann's US Steel lesson where he said tops and bottoms become halfway points in the market. Well, that's a potential piece of confirmation pointing us to the 75% milestone. Again, we had a brief pause at the 50% and a brief pause at 62.5% as well. So again, you can see why I would be watching the 75% retracement level. That's all for this video. Again, if you're new to the channel, there's some videos for you to check out to get up to speed quickly. And if you found value in this video, I'd really appreciate it if you could just click on the like button and leave a comment. It does help me to grow the channel. You can also subscribe to keep up to date with my latest videos. I generally post once, maybe twice a week, time permitting. Just a quick reminder that the Forex Form Guide goes out live 7 p.m. Sydney time every Sunday night, where we take a look at the major currency pairs through the lens of USD Gann analysis. Until then, all the best with your trading. Have a fantastic week and bye for now.